Yeah. Cool. So we're recording now. Yeah, as I was saying, I hope you're all having a great Sunday, had a good weekend, got some rest. Bernard, hello. So the plan hasn't changed in terms of Swiss yen. We'll go over a couple of markets. There's not too much I'm looking at. But yeah, before we go on too far, this is sorry, I won't be live or doing a webinar next week because this is basically the last one. So I'm going away on Tuesday. I'll be flying to Madrid to do a seminar. So I'll be there until next Monday. So that means I'll be away for Sunday. So I won't be able to do the one next week. I'll try to get the weekly analysis done, but again, I'm not 100% sure. So bear with me on that one. Um, but yeah, in terms of immediate trades, there's not too much I'm looking at. I mean, if you guys have been checking the Discord, you should know I'm looking at Swiss yen. I think we've got probably one of the best trades I've seen in a very long time, actually, or one of the best potential trades, I should say. So if we look immediately at what the central bank rates are, let me just log in again. Hold on. So yeah, we're basically just playing central bank rates on this trade, but or central bank policies, sorry. But there is other things. We do have weaker economics in the Swiss, but again, I've already covered all that in the Discord, so I'll leave too much detail. I won't go into too much detail, is what I'm trying to say. But yeah, if we look at the revised rates or the most up-to-date probabilities, we can see that the S&B, which is the one right down here, their current rate is at zero point 0.5, and it's expected that they are possibly going to go into negative rates later in the year, which could be towards the end of 2025. Again, it's not set in stone. Things can change, and obviously they might not want to go into negative rates, but there's a lot of talk about negative rates. Even on the terminal here, we can see it is projected that they're going to go into negative rates. So if we're looking at that, it presents a huge opportunity, really, for us to start taking trades based on this information. Now, the trades that we're looking at, or the trades I'm expecting to take on the Swiss, are not quick trades. They're trades that are going to last for the next year, maybe even year and a half. Again, it really depends on how data comes. And the way you would look at something like this, the way you would approach a trade is looking at something, or in this case, the central bank that's doing the exact opposite. So in this case, we look straight away at the Bank of Japan because we know that they're coming out of a loose policy or ultra loose policy. They're heading on a path now to sort of normalization. So again, we can see that their projected rates as we go through time into the end of 2025 is essentially just hiking. I have actually seen that it's only expected to be two hikes, but those two hikes are obviously still very influential when we're looking at a central bank that is cutting rates possibly into negative territory. And again, the Fed. So I'm already in the dollar Swiss trade. So if we have a look over here. You can see I've already taken dollar Swiss. Currently it's basically its entry, so it's no big deal. But yeah, I'm looking at this one. I've got to take profit set here, but again, it's open to change as time goes on and we get more data. So far, dollar Swiss, because we get not just a huge opportunity in terms of central bank divergence, but we also get positive swaps. Now we get positive swaps because obviously we've got a higher, excuse me, we've got a higher interest rate with the Federal Reserve than we do with the Swiss National Bank. We get relatively, in fact, actually, I don't think we even have much swaps on here. Yeah, we don't. So the Bank of Japan and the S&B have both got the same rates. So the swaps to go short are negligible. So obviously, if you went short dollar Swiss, you would be, sorry, dollar yen, you'd be paying quite a lot in swaps. So that's another pretty beneficial factor for going short on the Swiss yen. In terms of getting into a trade, again, it's more just a case of waiting for the next pullback. We do have a pretty nicely oversold RSI. We're continuing to push this Bollinger Band to the downside. They're just indicators. They don't mean too much, but it is a sign that we might see some sort of reversal, or sorry, not reversal, some sort of pullback into higher levels, and that's when I will be looking to start executing on these pullbacks to continue shorts. So. Last thing I'll say about this is the target levels are very low. So I'm looking to take this one into sort of the low 100s, anywhere from 135 to 100 on the dot. 100, well, actually, I'd say sort of 120 and lower is very, pessimistic, optimistic, depends which way you look at it. But either way, sort of 120 to 100 is an extreme sort of downside. So for that to happen, again, we would have to see some pretty serious developments. So immediately, or sort of, the closest level I would really be looking for is 135 to 130. So yeah, we'll keep an eye on those ones. In terms of other data, though, the US dollar is currently holding its ground. It did see a lot of selling pressure. We've seen a lot of uncertainty. Obviously, we had Trump. Actually, you know what's surprising? This weekend has been pretty quiet, which has been nice. Last weekend was an absolute mess. We had Trump come out and say there's tariffs. We saw market gaps. We saw spikes. People whipped out of trades. People whipped in to take profits. All sorts of stuff going on. But since then, we did have the news that the tariffs are, it was essentially empty talk because the tariffs with Canada have been postponed for 30 days. So what the hell is going on there? I have no idea. We'll have to see what happens after that 30 days. The ones with Mexico, as far as I'm aware, they've just been trashed in terms of Trump came to an agreement with Mexico to basically guard the borders and stop fentanyl coming in to America and stop the migrants coming to America as well, which is what he wanted. So the only one that's really stuck was China. Now, obviously, China's sort of fighting back, but the way I see it, China is likely to just let their currency devaluate against the US dollar to sort of fight the tariffs. But again, I don't really trade China or the Chinese yuan, so it's not really my concern, to be honest. Either way, the US data remains relatively positive. We did have a downturn in NFP, so let me just pull up the data from that uh, here, NFP. So NFP did undershoot. But there was quite a lot of people confused on the market reaction. So yes, NFP undershot what was expected and undershot previous, but what we also got was a revision on the previous NFP from January, which was massive, up at 307K. So that was a pretty positive sign. Again, NFP for this month wasn't great, but the revision was a little bit of a bolster in the right direction. But we also had a downtick in unemployment, which was great. So we've gone from 4.2, 4.1 down to 4. So we can see there is a 3-month decline here in unemployment, which is a positive. Unemployment claims sort of holding steady at sort of 207, 219, but it's not a huge thing for me. Jolts wasn't great either. We did see a bit of a downturn in Jolts. ADP was great. We had a pretty big overshoot in ADP as well. So overall, I'm pretty happy with the US dollar data. I don't really see any room for rate cuts at the moment. I would be expecting rate cuts to come by the Fed towards sort of halfway through the year. So anywhere sort of June onwards is when I would start saying that rate cuts are back on the table. For now, again, especially with tariffs are in talks and pretty positive US data. We've got sticky inflation around, is it 2.9% at the moment as well? I just don't see rate cuts as really much of a viable opportunity or a viable move by the Fed at the moment. So in terms of dollar price action, I would expect the US dollar to continue to appreciate in value. Whether we'll break out of this longer term range or this higher time frame range, I couldn't tell you. I'm not sure. We may even just sort of range in this area until we have more clarity on what's going on with tariffs. But again, we will just have to see. Our job isn't to make super long-term forecasts, really, especially in this type of environment, because it could go either way. So in my view, I'm happy to start trading the US dollar up into sort of towards 110, even just back to its previous high around 109. And then we'll take it from there. So let's see what else we've got. The yen, again, I'm pretty bullish on the yen in the long term. In terms of short term, we do still have carry pressure that's not really optimal. So what I mean by carry pressure is the US, how do I explain it? So carry trades are essentially when you would buy a currency against the yen, you get paid positive swaps, and you essentially just sit in that trade, making money from the swaps. We do still have that situation that is putting pressure on the yen, but we might be seeing a slight unwinding of that this year, which will benefit the yen. Again, with the Bank of Japan slowly starting to hike rates, heading towards normality or a normalized policy. Sorry, I'm just checking notes here, making sure I don't skip over anything or I don't miss any points. Um, yeah, so that's about it with the yen. There's not too much there. So let's see what else we've got. Eurozone is expected to continue cutting for the rest of this year, really. So we're looking at potentially four more cuts by the ECB, which again isn't really a surprise. Eurozone's not doing hot. The data's pretty lackluster. So again, if we just go ahead and have a look at the heat map for the euro or for the European Union, Eurozone, where has it gone? Here. So we can see the overall data just isn't very compelling for anyone to really be buying the euro at the moment. We can see GDP's come down, PMIs went up slightly, services PMIs come down, retail sales coming down, inflation's come down slightly. Inflation, obviously, inflation comes down, increases the likelihood of rate cuts, along with all of the other negative data. PMIs come down, unemployment's gone up. Interest rates, obviously, we've already had a cut. So, yeah, I remain bearish on that one. So, in terms of, again, looking for an actual trade, the euro dollar still seems like a pretty good selling opportunity. I'm still in favor of parity. It's more a case of just being very careful on this trade because, again, although I'm bullish on the US dollar, we've just got to be very, very careful with tariffs. Now, again, just leading slightly off with tariffs again, um, it is expected now that we're going to get some tariffs put on Europe. We did see a reaction from that actually on Friday here, when I can't remember exactly what he said word for word, so don't quote me on this, but I'm fairly sure it's something along the lines of tariffs are something that are going to be coming this week. Bearing in mind, he's already spoken about Europe. I think we spoke about this in last week's webinar. He was talking pretty negatively on Europe and saying he does want tariffs, and now he's saying that tariffs will be coming this week. So, yeah, as far as I'm aware, it seems like tariffs are coming onto Europe pretty soon. So again, that will be a very negative factor for the euro dollar, already paired with the weak data, the rate cuts, and the Federal Reserve holding rates for now. So yeah, I'm pretty happy to basically target parity, but again, in a cautious way. So it's not a case of I'm really just going to start placing entry stop loss take profit. I'll continue doing what I've already been doing, which is dollar cost averaging in. So I'll be selling pullbacks and waiting for the move in the direction. Um, and that's essentially it. Bernard, do you want the Australian dollar? There is absolutely nothing going on with the Australian dollar, my friend. So again, if you're ever confused with markets, just go and have a look at this. I send it out every Sunday, and you can go and just read it. I'm not going to read the whole thing, because again, you've got access to it, so you can go and read it in your own time. But the conclusion, short-term view, the Australian dollar remains vulnerable to China's economic performance and Fed policy shifts. Near-term downside risks persist unless China provides strong stimulus or the US data weakens. China's stimulus would be obviously beneficial, but short-lived. It's not so, it's like almost like a MOF intervention with the yen. It's something that can help short term, but it's not something that will change trends or fix problems. Again, it's just something to put a plaster over the problem temporarily. Medium-term view, RBA policy, inflation trends, and global risk sentiment will dictate direction. Um, If markets shift towards risk on mode and China stabilizes, AUD could recover modestly. So the thing is with the Australian dollar, it's not something I would be looking to buy or sell at the moment. I'm pretty flat. The only thing I would really look to trade with the Australian dollar would be maybe the yen and maybe Australian dollar, US dollar. And again, there's better options. If you're wanting to trade the Australian dollar, they're probably the best two, but again, not the strongest trades out there. Now, I saw you talking in the Discord this morning about the Australian dollar gaining strength. And to be honest, it's not really. The Australian dollar is obviously very heavily correlated with commodities. So with gold rising, I think Ian said this earlier. I think actually I just saw him join the call. But yeah, essentially gold has been a pretty good booster for the Australian dollar. But again, it's not something really that I would suggest is the most how do I even word that? It's not something I would really consider looking for a trade in the Australian dollar, if that makes sense. Um, but that segues nicely into gold. So gold at the moment is primed for longs. We already took a long position on gold. We made, I don't, it was pretty small. It was only a 1.1% gain or something like that. Um, but yeah, the idea, what I've got drawn up here remains. I'm looking for a higher time frame pullback just to come and touch this trend line again, remain on a steady path. So what we don't want to see is gold just completely rocket up because in that situation you can sort of scalp in, day trade maybe, but in terms of swing trading, you cannot get into a move like that. You need to see some sort of pullback and then continuation just to sort of normalize the price, if that makes sense, and sort of relax, allow buyers into the market, then continue, rather than it being a rocket ship that you just can't get into. I would expect gold to hit 3,000 at some point. Now, the catalyst for 3,000 isn't just what we've already got. So gold is really benefiting from obviously the sort of uncertainty in the markets at the moment. We've got the data is supportive of gold. So we can see here, the only negative things really are PMI, unemployment rate, and interest rates. But if we again refer back to what I was saying earlier about the US dollar or the Fed, we are looking for more Fed cuts later this year. So that could be what could push gold to 3,000. But again, I don't really want to take a trade on gold on the H4, looking to hold it for the next 7, maybe 8 months. So again, it might be something we just wait for pullbacks and sort of get in, get out repeatedly, small, maybe intraday trades, small swing trades, and sort of trade it into 3,000 rather than having one long-term trade. Um, awesome research we get every week. Good stuff, Mehdi. I'm glad you like it. Ian, hello. So yeah, I'm just trying to think if there's anything else specifically I wanted to discuss. Oh, oil, that was another one. Oil is again, it's very tricky. I've been speaking about oil quite a lot recently. Although I am bullish on oil and I would quite like to get in long, I just don't see the opportunity because we've been breaking level after level after level. We had a really strong support here, or I would call it a strong support. This level here was broken. We seem to just not be able to hold any higher prices. So although we've got OPEC continuing to cut supplies, we still have global tensions. I think the weight on oil is just too much. So rather than in this situation, rather than really trading what's actually going on, it would more be a case of just following momentum, following the trend, and just riding it. Um, which isn't something I really do. And to be honest, I don't think I will take this trade, but it is something to consider, especially if you do trade oil. So maybe see if we can get some sort of pullback on here. Then if we see this sort of continuation to the downside, maybe that would be an opportunity to start going short into this next level of support, so towards the $67 a barrel price. But again, it's not really a style of trading I like. I like to have the fundamentals and the technicals, not just momentum and trend. But again, it is something you can keep in mind. So what else do we have? The FTSE. Now, again, I don't trade the FTSE just because I hate the price action. Typically, if you look, it's just very, very range bound. However, with the Bank of England cuts that we're currently having, the higher gilt prices, and sort of just the negative pound price. Well, obviously, it's not priced negatively. I just mean the sort of negative sentiment around the pound. It is helping to bolster the FTSE. And this might present an opportunity to go long, which again, it's not something I ever really do. But we've broken out this range, and we're now presenting a pretty nice move to the upside. So the reason for this one would be the FTSE 100 remains attractive due to high dividend yields and low valuations. A weaker GBP benefits large cap FTSE stocks as most revenues come from international markets. Energy and commodity exposure supports the index if oil and metal prices remain elevated. So again, if we look at the commodities, obviously not oil, but if we look at gold, silver, copper, they're all doing quite well. So this might be an option. The only again, because it's not something I trade, in terms of the behavior and what to expect from price action, I'm not overly comfortable with. But again, if we just use basic things here, I think a very simple break, which we've had, look for this retest, and again, a continuation to the upside. So if we do get something like that, I may look to take a trade. So I'm just going to set an alert there because it seems very, very simple. And again, with the weakening pound, I think it's a pretty no-brainer trade, really. So with the sterling or the pound, again, I'm not really very optimistic in terms of its recovery anytime soon, especially against more or stronger G10 currencies like the US dollar and even the yen. Actually, I think pound yen could be a great short position. Um, so yeah, I'm happy to actually continue shorting pound dollar, euro dollar, basically at the same time, and trade it sort of towards 1.2. So the reason it's 1.2 is because this is sort of the institutional level. You see a lot of the bank reports are talking about 1.2. So again, if its eyes are on 1.2, it will be slowly but surely acting like a magnet. So we will be possibly seeing that level come into fruition at some point. So let's have a look at bank trades. We don't really have much interest in here. We do have MUFG that's currently short, oh sorry, got a sell limit on the euro yen. We've got London Stock Exchange that's short on the AUD USD. As I was saying earlier, I think that's still more than, well, yeah, more than happily say that's still a short position. We do have Danske Research has still got a sell limit on the dollar yen at 160. What else do we have? The London Stock Exchange is long on dollar CAD, which I can't really fathom why, because it's the dollar CAD is awful at the moment. It's stuck in a sideways range. So I would urge anyone to just stay away from dollar CAD until we've got more of a clear idea regarding tariffs. Euro dollar short by this one's also London Stock Exchange. So they've got this one, as far as I'm aware, that's completely fine trade. But who am I to judge their positions? Danske Research is in a short position on Australian dollar New Zealand. It's not something I trade again. The Australian dollar and the New Zealand dollar very highly correlated. It's not a market I ever really expect much action from. Typically, just very range bound. Australian dollar CAD. This one's interesting because we've got Bank of America currently in a short position, then we've got Normal Research that's actually in a long position. So they're both counter trading each other. So take what you will from that one. Again, not my bag of tricks, especially with the Canadian dollar in the situation it is. But with weaker oil prices and potential tariffs, I would suggest going short Canadian dollar is the better decision. But again, I just need to wait and see. I'm a bit more cautious, I guess, than they are. Um, so let's just let me refer to my notes again pretty quickly. I don't think there's much else to talk about actually. Uh, yeah, global interest rates we've already discussed. So US Treasury yields remain at 4.5 to 5%, limiting equity multiple expansion. Eurozone bond yields expected to decline as ECB cuts rates. Japanese bond market adjusting to slow BOJ tightening cycle. UK bond yields expected to decline as Bank of England cuts rates or rate cuts continue. Um, so yeah, that's about it actually. If there's any questions, let me know. We can go over some things. Is there somewhere to see bank positions in FX you were showing? Not really. I can send these to you in the Discord, which is what I've started doing on Mondays. But to actually see them, updated as soon as they come updated, you would need access to Prime Terminal, or you can use the bank reports, which is where these all come from, actually. But obviously, you would need to read them all to get those. So. Yes, it's your choice if you want to spend your all day reading every bank report every day. But yeah, I can try and keep you updated as much as I can with those. But yeah, again, if there's any questions, let me know. If not, we can call it a day. But Yeah, just trying to think, is there anything else specifically that I need to cover? Um, this would be a great idea to go short like Mufti on Euro Yen. Yes, I think the yen is interesting. So actually, let's just take another look at their position so we can have a deeper see. What's the stop loss? Um, Entries at 160. Is that right? Yeah, okay. So it's a sell limit at 160. So I think what we're really, or from their perspective, because we've also seen that Danske Research also has a sell limit here at 160 on the dollar yen. So it seems like we are, or we should be expecting some sort of pullback. Now, what will drive the pullback? I don't know. It could be continued weakness of the yen. Obviously, we've had this sort of short-term strength. Whether it will stay short-term and then we'll continue to see weakness, I don't know. Um, but yeah, I'm just very cautious with yen positions in terms of short-term, which is why I'm looking at Swiss yen shorts on such a large time frame. If you are looking to short these yen pairs on a shorter time frame, so sort of swing trades, day trades. I think the idea is completely fine, but again, just be very cautious about a short-term continuation to the downside. The euro remains weak. Again, I think the situation we're currently in regarding the yen, the Swiss, I don't think it's really priced in at the moment. The situation, obviously, we've been looking that the central bank probabilities are really not in favor of the Swiss this year and are pretty in favor of the yen. But we've only just entered 2025. So I would expect as the year goes on, these factors will slowly get priced in. So again, that's why I'm looking for a position trade, not just a swing trade to take it down to next lows. So yeah, again, what I'm trying to say is I think the idea is good. Just yeah, be cautious. But also what you are regarding the euro, although it's weak, Trump does want the situation in Russia-Ukraine to be ended. Now that would be a pretty large bolster for the euro. So that if that does happen, I would expect the euro to gain significant strength. So again, just be very, very vigilant on what's going on. Trump is well, these are Trump's markets. We're just trying to make some money in them. So yeah, you're gonna have to be very keyed into what's going on. But again, tariffs could be a great situation, but great catalyst to make some money going short on this one. But yeah, that is about it. So that, yeah, just to quickly recap, there isn't any real short-term trades I'm looking at. Potentially just um, euro dollar, Swiss yen, but again, we've already discussed that one. US 30, I'd still quite like to get long. So it could be any of the indices actually. It could be the S&P, Dow, Nasdaq. Any one of them would be fine. But the price action at the moment isn't good. So if you just look at any of them on the H4, they're all sort of just stuck in this range bound move. So yeah, I need to see some sort of break, which I don't really see happening immediately. Do you think interest rate cuts by Federal Reserve or New Zealand will continue to drive NZD/USD down? Let's see. I've not really looked into New Zealand. Yes. So again, if we're looking at central bank divergence and relative US dollar strength, Fed is holding rates until I would expect until sort of halfway through this year. And we do have the Reserve Bank of New Zealand that is cutting rates. It seems like they're expected to cut, uh, yeah, essentially for the rest of the year. Obviously, there might be some holds mixed in there, but yeah, I would suggest that the central bank divergence there would be quite a nice position to go short. Again, China is really suffering, but in this case, if you're going short New Zealand dollar or even on the Australian dollar, you do need to pay attention to Chinese stimulus. Because if that does come, although it will be short-term strength, it will still be strength that you might get caught in. So yeah, I think again the idea is fine. Again, just be very vigilant on what's going on in the markets. As always, it's one of those things. But yeah, New Zealand dollar. In fact, all of the dollar crosses apart from dollar yen, I would say are all still to the downside. Until further notice, actually. But yeah, so guys, this has been the last webinar Well, I keep saying the last. I won't be. What I'm trying to say, there won't be a webinar next week again because I'm away. For anyone that wasn't here when I started, so I'll be away from Tuesday until Monday next week. So there won't be a webinar next week, but I'll try to get the research done as always. If not, then I'll do it on Monday when I'm back. But yeah. So, guys, have a great one. Mehdi, thank you. Guys, I hope you all enjoyed your weekends. Obviously, you can ask any questions in the Elite chat if you have any. And I will see you all later. I appreciate you all being here. I will see you all very, very soon.